Traders, welcome to day two of the ALGO Mastermind training. Glad to be back here with you. What'd you guys think yesterday? Did you guys learn some things, pick up some new ideas and thoughts? We're going to be diving deeper in today. Yesterday was kind of kind of getting ready for everything and kind of getting everything prepped. Today we're going to be looking more at how to implement this process, how to really get it started. So that's what we're looking at today. So deployment and implementation. Of course, we can't guarantee results. Products and services are for educational purposes. Please understand the risks of trading. Cool deal. So what are we looking at today? We're going to look at planning out your algo business. We're going to look at step-by-step process on how you might want to build your portfolio. Trading multiple accounts, how to do that, money management blockers, we're going to look at that. We're going to look at account level blockers as well, which some of you may not even have known that exists. We're going to look at optimization notes and performance sheets. We kind of looked at it a little bit yesterday. Reviewing optimizer templates, developing parameter ranges, trader development, next steps, and how do you continue to grow. Okay. So let's dive in. So planning out your algo business. So you have some algos. How many algos do you want to trade? It depends. There's a lot of factors that you want to keep in mind. How do you want to trade with the algos? Are you going to be self-funded or are you going to trade for prop firms? Are you going to trade multiple accounts? You would need, if you're trading multiple algos on the same instrument, it would probably be wise to have multiple accounts to make your life easier. Although, like we talked about, most prop firms will not let you trade long on one account and short on the other on the same instrument at the same time. So that's something you need to keep in mind. If you're in a trade on an instrument, like we talked about yesterday, you can go into the strategies tab, and you can simply just go in and just turn them off, right? So let's say I want to go by instrument. I just got to trade on NQ and it's on CWAP. So I'm going to go, okay, engulfing and pin bar are turned off until this trade is closed. And at that point, once that trade is closed, then I will go ahead and re-enable those and then keep an eye on it. So that's a way to get around it. I think to me, that would be the way that I would do it if I had multiple algos on the same instrument. So that's a way to do it. Money management blockers. How do you protect your accounts and how do you set max limits and rhythmic? And then we already talked about the strategies tab. Another thing that you can do, let's say you forgot to turn off one of the algos and you're in multiple trades at the same time. You can just go into that algo and turn it off. It'll close the position. Or you can do the drop down menu, right? And you can just go, let's just say we're in here and we go in and we just hit off. Now, if you're live trading, these will be highlighted and you can click them and you just hit off and it's going to close your trade. So that's a quick way to, get the job done without having to close out all of your trades. If you are ever getting into a situation where all hell is breaking loose and everything's going haywire, just go into your positions tab in NinjaTrader. You right click, you hit flatten everything. Okay. So that's a way to do it. If you have orders on, you're going to go to orders and you're going to click cancel all orders. You just go cancel all orders. Okay. For some reason, I have a phantom order right now. I don't know why, but whatever. So that is a way to do it. Now, another thing you want to do, if let's say, things are going haywire, cancel the copy trader connections. Always pay attention to your copy trader and make sure that you're staying on top of that as well. So here's the suggestion. When you're starting out with building this process out, start with multiple SIM accounts. Let's do that. Start with multiple SIM accounts. Prove the model, test the model, get used to doing it live. Because if something goes wrong, you're not going to be freaking out and like panicking and having a heart attack trying to fix everything. Like you just go in, close all your trades, whatever. Do it in sim for a little bit until you're really comfortable with the process of your day, your daily process of, starting the algos, pulling up the workspace, enabling the algos, which ones are you running, selection of algos, right? Which ones are you running today on which markets and why? Maybe it's purely because your portfolio tells you that you're going to trade these 5 algos on, 5 different markets. And based on your portfolio testing, those were testing the best. And so that's what you're going to run. Other traders might say, well, I want to run, today was very bearish on the equities, on NQ and ES specifically. So let's say on those markets, you say, I'm only going to trade short the Weibo because that market is moving. And so I want to catch those breaks. And so, maybe you only trade short Weibo on MNQ today. Maybe crude and gold, you just, trade whatever. And then, looking at the news, how do you, block out the news? You can also set limits in your Rhythmic, and we'll show you how to do that as well. For things like on crude oil inventory. Let's say you want to be done trading by 10:15 to get ahead of the crude oil inventory. You can do that. And so we're going to look at how to do that. Aside from, obviously, you can obviously just turn the algo off if you're sitting there, or you can go into the settings for the day and change the time. That's another choice. Or you can do everything in the Rhythmic end, and so it won't let you trade if you do that. So we're going to go over that together. So these are all things that you want to kind of get nailed down while trading in sim, is how to do all this stuff, how to set yourself up for, all these different things. Oh, nice. Fibs. Okay, cool. Good. You got something then. Feel free to work on that. And if you want to send it over to me and get some added set of eyes on it, I'm happy to review it. Just send me the template if you like. So totally fine. And that goes for all of you, I mean, without getting myself in too deep here, if I get too busy, I'll call in reinforcements. But if you have a template that you just want a second set of eyes on, you've, spent the time, you've optimized, you've, gone through and done everything, and maybe you just want to just make sure that everything's good to go. I'm happy to take a look at it for you and give you feedback. So, what? Show the last slide. This one or the one before? This one? And then there's this one. I don't know which one you need to see. So, okay, cool. So, started in sim, then once you're comfortable, and everybody's timing is going to be different, then go to, whether you're trading the evals or the prop PAs, or you're trading your own funds, then go to live accounts, start small, then build, here's my take on trading in general. Whether you're trading with algos, whether you're trading with indicators, whether you're fully manual, I don't care how you trade. I do care, but based on this, I don't care. So what you may consider doing, and what I think would be wise as a suggestion, don't trade real money until you have traded out of a drawdown successfully. Prove that you can trade out of a drawdown. Prove that you can successfully find your way out without destroying your entire, your entire account, or going beyond the max drawdown and so on. So trade out of a drawdown. Another thing that I would suggest is when you're in a drawdown, like I am, I took a loss yesterday, so I'm in a drawdown. So this is just a suggestion, do what you want. Size down. Size down until you are out of the drawdown. Okay. Why would you do that? Because then instead of your drawdown looking something like this, I can grab a draw tool maybe. instead of your drawdown process looking like that, your drawdown is going to look like this. So you start losing quicker, and then you start sloping. And then when you're coming back up, you start increasing speed and so on as you're coming out of the drawdown. So this is your max drawdown. It goes slow at first, and then as you start picking back steam, you can start sizing back up your positions again. So size down at first based on how much you have left in the drawdown. Those of you that are with me in the GAP program know we talk about this a lot, because this is the way that you keep your funded accounts without losing them. The first step is, let's say you have, $5,000 drawdown. I'll just pick a number, and you say, I'm going to risk 250 per trade, let's say, as an example. Let's say day one, you lose 3 trades. You're down 3 trades. You're down 750. So your drawdown is not 5,000 anymore. Your drawdown is 4,250. So then you take that, and whatever that multiple is, in this case was 20, you're going to take 4,250, what is left of your drawdown, divided by 20. Now your risk per trade is 212. Let's say you have a winning day, and now you made 212. So you take the 212 plus 4,250, your drawdown is now 4,462, divided by 20. The next day, you're at 223. Say you take a losing day. Now you're down to, 450. Okay, so you take your 4,250, whatever it is at that point. We're just going to use that number since it's there. And you're going to, subtract 450. Now your drawdown's 3,800. Divide that by 20. So you do this every day until you're out of the drawdown. Once you're out of the drawdown, then you go back to your 250 mark and you stay there until you're in a drawdown again. So for what it's worth, whether you're trading your own money, whether you're trading prop firms, I think that is a really great model to make sure that you don't go blowing out your accounts. And if you get to 2 weeks of losing, you need to go back to, well, you might strongly consider going back to sim for a while. 1, to get your head straight, and 2, to prove that your strategy is still working and that the market's responding to your strategy again. There may be just days where the market doesn't respond to your strategy. I had one of those yesterday, and sometimes it's just a fluke. It's just a weird day, and you keep moving on. But this is a way to protect yourself when you're building out a business of trading. You really want to consider these concepts, and you really want to put these into practice. So leave nothing to chance would be the suggestion. When you're trading for a living, this is very serious. There's money on the line. So leave nothing to chance. And what do I mean by that is make detailed plans on everything you do, everything. And you might think it's overkill, and you know what? It might be. But better to be prepared and over-prepared than to be under-prepared and wondering what the hell to do. Be over-prepared. Prepare everything. Know exactly what you're doing. I'll just use myself as an example because I know what I do. I take screenshots of every trade I take. I keep a log of every trade that I take. Not only do I keep a log, but I track it in TraderView as well. I have every trade broken down by instrument, broken down by trade type, and I can go back and look and see what my win rate is over time, what my profit factor is over time, what the average is. Am I going up? Am I going down? What about if I want to look at a specific trade on a specific market? I can go in and look at that. I have all that data to be able to look and see, am I trending up? Am I trending down? What's going on? And then I can look at, well, if there's something wrong, why? Then I go back and pull up all my trades and see. I know exactly how to trade out of a drawdown because I've got it planned out. If you don't have a plan for a drawdown, the market has a plan for you. That plan that the market has for you is it's going to take your money. So plan for that drawdown because it's going to happen. And if you don't plan it, it's going to plan it for you. Yeah. So the way that I organize everything, I export all my trades every day into TraderView. And then I put in what trade type it is. So was it a CWAP trade, a VWAP trade, whatever I'm trading. I do that every day. And then I just go in and look, where am I at? Where's my drawdown? In the drawdown, I look at every day what my risk is based on that drawdown. And I plan for that dollar size of trade for that day. Trader view, yeah, I'll show you. It's really cool. I'm going to give you a link actually. Let me go in here. I'll show it to you. And then for my images, I just keep an image of you know, on a Google Doc, and I just paste the images in there. It's real simple, but it works. Oh, where is it? Let me see. Trader view. There we go. Copy the link. Yeah, there you go. So that is Trader View. So if you go there, you do get a little bit of a discount if you go to the, the annual pricing or whatever, but you can sign up. They have free versions. I think for futures, I think you need to pay for it. Whatever. 30 trades a month. Yeah. Oh, you do get futures. You only get 30 trades a month. So, and then basic reporting, this gives you advanced, which is kind of cool. You can see your win rates over time. You can see tag breakdowns based on your trade type, which ones are the most profitable, which ones have the best profit factors. There's quite a bit you can do with it. So, and then the gold is, the best of the best. So as it relates to algos, you're not trading manually. So why not take screenshots of your trades for the day? Why not keep those? Well, because I can go back and look at them anytime. Yeah, you could. But wouldn't it be easier just to have them all in one central place and not have to go run a back test again and go to the chart and start digging through it and just keep images. I mean, if you want to, it's not a big deal either way. Track your progress. We already talked about, tracking what your results are, what your test results are, keeping track of what your ranges were. What did you test? What worked? What doesn't? As you start to see more iterations and more algo templates that you're optimizing, you're going to know what these ranges need to be. You're going to be able to refine your numbers for that market, and your testing is going to get a lot quicker. Plus, you're just going to get better at it because you're going to know what you're looking at. You're going to see it, and it's going to be real easy. So those type of things. How many accounts do you want to trade? You can plan out your risk. If we go in here and look at, for example, all of the trades, and let's say we want to go in here, we want to plan out our risk. Well, we have, I think this one has three examples of three different, strategies built in here. So looking at this, so let's say, for example, we're trading on a 150 account on Apex, let's say. I think the max drawdown there is 5,000. So what I've done with this spreadsheet is I've had it calculate out what's the max number of trades that all of the algos combined took in one day. That number is 23, which is a lot of trades. Here's the thing. When you're trading 23 trades and your win rate is 65%, what are the odds that you're going to lose 23 trades that day? Like, it's not going to happen. I never say never, but odds are extremely low that that you would hit those kind of numbers. Okay, so what you do want to look at, and you can use, if you guys have a better resource, by all means, let me know, because I would love to have a better resource for statistics. But what I've done in the past is I just go to this site and look at the streak calculator. And what you want to look at is, let's say we have 100 trades and we want to know what's the likelihood that we lose 12 in a row with a 65% win rate. So we would have a loss probability of 35, not 3,500, but 35. And you can calculate. So what are the likelihood that we're going to lose 12 in a row? It's 0.2%. Very low. What about 11 in a row? 0.5%. So 0.5% is pretty low odds, right? So let's just say we put this at 11. The max I want to lose in a day is 11 trades. Now remember, we're not coming up with this first. We're coming up with these numbers first, which tell us how much to risk. So let's keep going here. So let's say max loss for you is 11 trades. How many times are you going to have that many losing days or that many losing trades in a day? It's pretty rare. So let's say you go with, 2 trades, 2 max losing days in the week. That's going to give you a risk multiple of about 22. What that means is you're going to take the 5,000 divided by 22, and that gets you your max risk per trade at about 227. Okay. Now you can do this in any way, shape, or form you decide. I can't tell you how much to risk. That's entirely up to you. It's entirely up to your model and what you want to go with. But based on this, let's look at the numbers. So if we risk 227, this is set to, by the way, to change all of the numbers based on how much I'm risking here. So I've got it formatted to update all the risk numbers. You can see that's where this column comes in, risk adjusted. So we got about 200 trades here. If we're risking 227, this is going to give us a max drawdown of 1,000 and a profitability of 6,700. Okay, so it's great. Really good numbers. Here's what I would suggest. Remember, we talk a lot about, I don't know why it does that, but we talk a lot about proper expectations. Here's what I would suggest. Take this number, multiply it by 2 times 2. Take this number, divide it by 2. Now you're saying we're going to have 1,900 max drawdown, and this is going to net us, call it 3,300 in profit. That's what I would do. Just take those numbers and take extremes and plan on these numbers, not these numbers. Would we love it if we hit these numbers? Absolutely. Is that going to happen? I have no idea. So plan for the worst. And then if you do better than that, then great. You're in good shape, right? Make sense? So that's a way that you can plan your risk. Now, the fact is you need to know, well, this is 3 algos. What's your, your average, average trade is about 148. Average win, sorry, is 148. Average loss is 176. Average trade, about $33 per trade. You're not going to average, 23 trades a day. We can figure out what that is actually. See. Let me see if this will work. Actually, I'm not sure. Yeah, that's pretty reasonable. I'm sure that's pretty accurate, actually. So about 7 trades a day is the average. So, what's your average going to be? 7 trades a day times average profit. It's about 1 net trade per day. So if you get to, let's talk max and minimums. Okay, so we know our max loss is 11 trades. That's pretty big number. That's going to put us at 2,500 max drawdown for the day. Maybe you look at that and you go, no freaking way. I don't know. It's up to you. You have to decide what works for you. But if you're averaging 7 trades a day, maybe this number should be 7 with 3 max losers in a day or in a week. Maybe it's 7 max losers and 2 max losing days in a week to hit your drawdown. To me, I think that's a little bit too aggressive. I'd probably rather live here. So this is saying that if you're down 7 trades, you're done for the day because you're averaging 7 trades a day. Some days you get a lot more, apparently. But if you're down 7 trades, you're done for the day. So that puts you at a max risk of 1667. Okay, so that's your max risk for the day. Now you can plan for these numbers. Your max gain. What's your max gain going to be for the day? If you have, a max loss of 1,600, maybe your max gain is like 1.5 times that. I don't know. Maybe it's 2,400 or something. It's probably a pretty good number. Let's go with those. Let's go with 2,400 and 1,600 as minimum and maximum. Cool. I think that'll work. So those become, we're just kind of using this as an example of how to plan this out. So max is 2,400, minimum is negative 1,600, and that's your plan. You're going to average 7 trades a day. Max is 23 trades per day. Figure this stuff out so that you know where you need to be. And then we're going to plan on, max drawdown in a month is going to be about 2,000 in this case, and we can make roughly up to 3,500. So you look at these numbers and you say, cool, I can trade a 50K. You could, but then all these numbers change because your max drawdown is not 2,500 anymore, or 5,000, it's 2,500. So now you just chopped your risk in half, which you can do, but just know that that changes everything. And now your numbers are, you could lose 1,000 and you could make half that at 1,800, which is still great, still fine, you know. But plan this stuff out, because again, if you don't plan it, the market will plan it for you. You could certainly trade with a VPS, although if you're running multiple algos, it might get to be tough because they don't give you a lot of RAM on those. Yeah. Yeah, just make sure it has enough RAM to run Ninja, exactly. So you might end up paying a little bit more, but there's an advantage to that, is you can access it from anywhere. You don't have to worry about electrical outages, internet outages. You don't really have to worry about that. And if I'm not mistaken, they actually give you the access to the full license of Ninja versus just the leased version, which is pretty cool. Then you can do multi-connection and a lot of other benefits that open up to you. Cool. Good stuff. So this is some of the planning. Let's go back to our sheet here. So multiple accounts. Maybe you want to trade, 2 algos on one account, and you want to trade the other 2 on the other account, and that's how you're going to do it. You could do that. Maybe you want to trade all of the algos on one account, and maybe you want to copy to 10 other accounts or whatever. Do it that way. You decide. You're the boss. You make your own rules. That's the beauty of trading. How many days should you load on a 1 and 5 minute chart? It's a great question. My suggestion is 2 days. 2 days. Because that's going to usually give you enough bar count to where you'll be able to run the algos efficiently, but not overload it with tons of data to where it's going to be having a hard time to keep up. Yeah. Be quicker load on your workspaces too. So that's my suggestion. That's what I would do. 2 to 3 days tops is plenty in most cases. If you're doing higher time frame charts, then you're going to need more days, obviously. But yeah, there was a question about RAM requirements for multiple algos. 16 is probably going to cut it for you, as long as you got a good processor on the VPS, then you should be fine. And if it were me, I'd be paranoid and I'd probably just go with 32, depending on the cost. But you could always try, 16 first, and then if you're having trouble, then you upgrade. Save yourself the money. Don't pay for it if you don't need it. So these are kind of some of the planning details on how to do this. And as I mentioned, this spreadsheet is not this one. They both are, but that spreadsheet is going in the package that you'll get access to with all the deliverables. So you'll have this exact spreadsheet. So if if you're familiar with Excel, great. If not, what I can tell you is you want to live in here, and then that's kind of where you want to paste your trades. Granted, it's, a little bit involved, and I haven't locked the, I didn't lock these fields. So if you break them, it's broken. So you're on your own. I put it together, and that's the extent of it. But yeah, you can always, if you need to get more trades, let's say, what you want to do is just go in here and highlight these, and then grab this little box and drag it down. And that'll work for you. Okay. So, but this is a good starting point. And even if you clone this and do your own thing, you can have a pretty good idea of, keeping track of your trades and so on. Obviously, this sheet is going to be more like what traders are going to live by, something along these lines. Jeff has another version that we've included in the package as well, and his is more formatted and more, and I guess it's better. I mean, really, I just wanted something simple, and I didn't care what it looked like. So,
well, and mine is just a format. It's not like it has actual data that you need to pay attention to. It's more just a good format for organizing your entering all the, the parameters as you go through the process. It's just an idea for
Yeah.
a format.
Yeah, it gives you the spot to take notes and to enter details and all of that. So that'll be available for you. Let me see.
We have a link already for that. Should I post it?
Yeah, go ahead. Go ahead and post it. Also, let me give you guys this link again, which is going to have the replays and everything. So I know we were asking yesterday, day one replay is there. And then day two will be obviously available after day two is over. And then everything is here. So cheat sheets, templates, all that stuff is right here. So it looks like it's all in this one is actually where you want to go. Yeah, pay no attention to the Google Drive that Jeff gave you. Because then you're all going to be asking for access and they're not going to give you access. So this is where you want to be. Just click download here. So good stuff. Cool. We'll just move this out of the way because we'll need it again. And I'm going to bring up this link while I'm at it. Sweet. Okay. How's everybody doing so far? So far, so good, right? Everybody good? Any questions so far on what we're looking at? Make sure we're all on the same page. We're going to look at money management blockers next. Still awake. Good. Now, some of you are east of us and it's quite late. So cool. So we're going to look at protecting your accounts. How do you set limits in Rhythmic? We're going to look at that together. Why don't we take a quick 5-minute? I need to grab some more water and we'll just take a quick 5-minute break and then we'll come back. So let's come back at, let's say 2:40. So do a quick break. Back at 2:40. And I'll even put this here. Then you'll know what time it is. There you go. All right, we'll be right back. All right, we are back in action. Yeah. Let's take a look at it. So, actually, let's do this. Let's go to our CWAP, which didn't do great today. But what you can do if you are actively trading it, you would go into your NinjaTrader panel and you'd go to new trade performance. Okay. I'll show you how to do it here, actually. Hang on one second. Okay. So you go into your trade performance. It's going to look like this. You can change the dates, but just do 7/24. If you want to export the trades, you would export them here. If you want to export the executions, like if you're loading it into Trader View, you need to export as executions, and then you just click export, and it's going to ask you what file type. You always want to do CSV, and then you would save it wherever you want. So that's how you export if you're actively trading it. If you want to just see what the strategy performance is like, and you're not actively trading it, let's say it's a back test, then you just go there, and then same thing. You can go in and look at the trades, and then just right click export. So that's how you do it. Pretty simple. Pretty easy going, nothing too crazy. All right, so how do you set max limits and losses and so on? I went through and tested this theory on an actual Apex eval on this one. You can see I was doing a lot of trading in here because I was trying to figure out if it's going to work. So here's what we got. So if you go to Rhythmic, if you're not trading in Rhythmic, I don't know how to do it. But if you're trading Rhythmic, then this is how to do it. So you go to the account that you want. I'm going to show you a screenshot. It's going to look like this. I blurred everything out, okay? But your account's going to be here. You right click. When you right click, you're going to see view risk parameters. And we can do this together if you want to follow along. So in our trader, Rhythmic, right click the account, go to view risk parameters, okay? When you do that, this is what it's going to look like. It's going to start out here, and you'll see like max orders, max loss limit, minimum account balance, and so on. So this is set by Apex, right? Then you go over to risk parameters set by the trader, and you go here. And what you want to do is click the accounts that you want to set parameters on, and then you go to auto liquidate and click enabled. And then there's a number of different choices here. You do a minimum account balance, percent, loss limits, so on. Trailing minimum, just keep it easy, go to loss limit. What this is going to do is it's going to set a daily loss limit for you. I think on that particular account, I'm actually down a little bit on the day. And so I've got it set to 280, which is enough that it's not going to be in, and give me a little bit of breathing room. So at any point during the day, if this account is down 280, it's going to close the trade, and it won't let you put new trades on. Okay, so as it is right now, if I go to sell the market and I'm live, and it'll let me trade, right? Because I'm within my limit. If I go, certain extent and I get down, 280, then it'll end up closing out my positions. Now, here's another factor that you need to know too is when you're seeing the total P&L in NinjaTrader, that does not usually include the commissions. So even though I see one number in Ninja, I see a different number in the actual Rhythmic, okay, because it's including the commissions and the loss for the day, which is down a little bit. And so you need to keep that. See, I'm just great at doing this on the fly. um, but bear that in mind. So whenever you're looking at P&L, you always want to look at Apex Rhythmic, and it'll show you how much you're actually down with commissions and everything. Okay, so bear that in mind. So now let's say I go back in and I set it to be more restrictive. Okay, so now I'm here. I'm gonna go to loss limit, and let's say I just put $100 in there. So really small amount, whatever. This is a bigger account, so $100. And now if I go to trade, I need to hit OK. So I hit OK, and that'll update everything. Sorry. And then if you go to here, and then if I go to trade now, it's not going to let me trade. I can go to, let's try sell limit. So it'll let me put the limit order on. But if I go to get in, you see how that position just closed automatically? It just closed instantly. It just closed it at market because I'm beyond that loss threshold for the day. So I can't trade it. Okay, so it's going to close the trades anytime it sees that. Now, it'll still let you open a trade because bear in mind, it's closing trades when you are beyond that level. So if it sees you're past that, trade's closing. So we had a trader who unfortunately left an order on last night, going long on MNQ. And you can imagine how that went. It was an open order and there was no stops, no targets. It was just an open order to go long, and it triggered as a limit order. And then, you know, obviously NQ did something very similar to this. so that account was toast because there was a naked order just hanging out in there. So what you can do to protect yourself in those events is put like an extreme number in there that, you know you're never going to go past that in the day. And you could protect yourself that way to where even if there is an order, it'll still, stop you from getting any further down in the red. Will our trader still keep you from trading past the max loss? Yes. So I'm in Ninja right now. I don't have any parameters set up in Ninja. Everything is set up in our trader. It will not let me trade right now because my limit is set and I'm a little bit past that limit. So if I go to sell market, it closes the trade right away. And by the way, every time I do that, I pay a commission, which is great. So it's a lot better than losing more anyway, but that's how you do it. So you can set those up on each account. So if you have, it will override the algo. If the algo tries to place trades, it's going to immediately close those trades. Now, I don't know what that's going to do in algo land, like if that's going to throw everything off. I mean, hell, let's try it together. Okay, let's see what happens if we do this. I'm going to put a very active algo on, and we're going to let it go hog wild. And we'll just see what happens. Here, we're going to turn them all on, and we're just fine. Actually, let's just go stacked and balance, and we'll go horizontal, minimum 3, minimum 3. That's fine. Off, and we'll go intrabar. Long and short, and I'll just do 2 ticks on either side. Okay, and we're going to go in and ignore the trade time. This is set to back test. Let's do real time. Okay, and then auto disarm mode off, because I want to see if it's going to continue to keep trading. And then we'll ignore trade time. All right, so let me set up the eval account on here. And then let's enable it. Might even go to a 10 range or something too. Let's go to a full range. So right now I'm I'm past that limit, so I want to see how does the algo interact in that sense. We'll test the theory together. How many days are on this chart, for crying out loud? Broke it again. All right, just give it a second to catch up here. So it did take a trade there. Let me set up bigger numbers because I don't know if it's closing out automatically or if it's closing out from the algo. Taking one for the team here with this eval. Did I freeze it? Yeah, I might have froze the chart. There it goes. All right, so real time, it is set to off. Let's go long and short. Okay, just entered me in a trade, and it is not overwriting, which is interesting. Let me double check and make sure I still have it on and enabled. I do have it enabled. Huh. That is interesting. I'm on the right account. I think I'm on the right account. Let me double check something here. Yeah. See, I don't show the position in Ninja though. So no, I'm not in the trade. This is not an active trade, but the limits and stops are still active. So what I'm thinking is when these get triggered, it's gonna end up triggering those. And it'll just open and close another position right away because it's not in an active position right now. Even though it only shows the one side, this is not an active trade actually.
I mean, NinjaTrader strategies are not designed to handle outside interference. So
Exactly.
so what you're doing is you're stepping into the algo and closing out a position where the algo thinks, hey, I've got stops and targets in place.
Yep.
It's not really designed, this NinjaTrader strategies are not really designed for that. So,
So just so you guys know, like if you see that you're beyond that in your account, you're going to have to kind of also manually intervene. But this will at least stop a bulk of the damage, depending on how active that strategy is. Now, I picked one that is very, very active. And let's see if it's still, so it is still set to go long and short. And it's trying to fire trades, but it's this time it didn't go. It didn't accept it. So just make sure I don't have any positions. Yeah. So it will intervene. May not be the prettiest thing in the world, but it will prevent you from getting any further down that line because as soon as anything opens, it's gonna close it right away. So you'll just be paying tons of money in commissions depending on how many orders you've got, but it'll save you from losing anymore. So you see how this shows open P&L, but there's actually no P&L. So, and just go to off. And now it looks like it took a trade, but that's actually not the trade. Okay, so if I go in here and disable this strategy, and then you'll see what the actual orders are. Maybe. See. Markets only, yeah. Let's try to refresh. Yeah, I don't know. They're not showing. That's okay. Yeah. So what you do is you go to your account. So go to your standard trader dashboard, and then you pull up the account and you're going to right click on the account. When you right click the account, you'll see manage risk parameters. And that's going to take you here. And then you can set this number to whatever you want. Maybe it's 1,000 a day, or we looked at the, what was it, 2,400 and 1,600 or something. So you could set that to 1,600, and anytime if you ever get to that number, it won't let you take other trades. It'll just close them down. So it's not quite the same as where, like, when they set these, it won't let you like do anything, because it says administrator access only if you like blow out an account or break a rule or something like that. This is going to be a little bit different, so just bear that in mind. Cool deal. So that is a way that you got multiple algos, and the algos are individual, right? When you set up a loss limit in the algo, it's that algo only. That algo doesn't know what you're doing on the other algos on that account. It doesn't know that. Now, what you could do is you could go in and set the account balance and all that, but it's still, you're going to have to do that every day. So the way I think is a little bit easier as a fail safe is just go into Rhythmic and set it up that way. So Jose's got a question about Replicanto and having issues. One thing with Replicanto, they do update regularly. So you always want to be on the most up-to-date version. So when it gives you the little nasty pop-up that says update, just make sure to update right away. Yeah, don't wait to update. You want to go ahead and do that right away. So that's always first. If you continue having problems beyond that, then I would say reach out to Replicanto and see what they got to say about it. So, of course they do. Probably is. I don't know. I've not had any problems with Replicanto, so I don't know. Not sure what to tell you. So, cool. So that is a way that you can protect yourself. I think we're good on that, right? So let's go to optimizations. Let's go to Strategy Analyzer. So we've got, let's go ahead and get rid of the log for now. So if we go into our strategies here, we ended up updating some of these, right? We went through, we were able to tighten up some of these numbers. So I can go in here and I can go to engulfing. Let's make this a little bigger. Let's go to engulfing, and I'm going to load the optimizer 2000. Let's go to MNQ is this one. Okay, now I'm going to open up my settings that I'm doing. So I'm looking for bar 1 minimum body is this one. Bar 1 minimum size is here. Minimum stop is going to be down by stop losses right here. And then stop offset right there. So I've updated some of these. So let's go top to bottom. So this can be 45 to 75. I'm going to go by fives. Next one, we can leave this as 0.5 to 1 because we can tighten that up. Minimum stop, can tighten this up to 16 to 28 by fours. And then this one is 15 to 50 by fives. So this would be a decent handful of iterations. You want to go down to, this is already set to max net profit. So the first thing I'm going to do is just save it and just go in here. We'll go MNQ save. And then we can update it to, let's say, the 19th. And we'll just do 1 week so we can get it done a little quicker. And then run. It would help if I knew what to run it on. So there's 1,300 iterations if you test them all together. What I've been doing is testing 2 of them separately. And it goes a lot quicker if you do it that way. But once you know what your parameters are, save it. And then all you have to do is just run that. And then you're good. You just do that once a week. track your numbers, let the thing trade. That's about all there is to it. So pretty cool. So how do you figure out what to optimize, what not to optimize? So one thing is you want to keep very good notes like we looked at. What are your ranges? What are your numbers? What are the results coming back at each week? What were the results if you change those numbers? You can look back and say, what was my worst week? Was right here. What were the numbers like that week? Well, these two numbers were both different than any of these final 4 weeks. So if I see something come in that's kind of outside of the realm of these, then maybe I might be a little bit like, I don't know about that, because this time I did that number and it gave me a negative result. And the stop offset's different. And the minimum stop is a little bit bigger, which frankly, a lot of times they don't make any difference anyway. But the stop offset's very different. You can see that it's much smaller than the other numbers as well. So having this data will help you analyze to know what do you want to do with your templates and how do you get the best results. Again, avoiding over optimizing, not getting too far out there to where you're just way out in the clouds and trying to come up with something that's just, again, it's kind of like Frankenstein, but you'll find those common results, right? Like we go into that strategy and we're going to see, what are our common results? We're kind of living in here. These are the most common results, and those become your guardrails. If you get one of those settings that's outside of those, typical range, if you will, if it's one of those, then maybe that's just an anomaly and you run with it. But if all the numbers are outside of your norm, then you probably want to go inspect the charts and see what's going on. Is there something goofy happening, and take another look at it. All right, so good to go there. So that'll help you eliminate the outliers. You focus on, as we talked about, consistency, not perfection. You're really looking for, how do I get returns every week? To where you're not taking losses. That's the most important thing, because if you've got all of your algos are making money for the week, do you really care? Like, you care how much each algo made, but are you really pressing the issue like, oh, this one only made 500 for the week and I really was hoping to make 2,000? Like, yeah, but you made money. If you make money across 5 different algos every week, what's the freaking problem? I mean, you look at it that way, it's like you're not looking for perfection, because the perfection is done by diversification. You're outrunning that profitability with diversification, because you've got multiple algos. So again, if multiple algos are making you money, then great. All right. So what about next steps? How do you continue to get better as a trader? How do you continue to improve? The way that I look at it, if you look at any business, a business that is stagnant doesn't stick around. It's a business that doesn't grow is dying, really. And I think a good way to look at trading is the same way. I'm always getting better as a trader every day. Every day. I've been trading a long time. Well, long-ish. I've been trading a decent amount of time, 16 years. And I still focus on getting better all the time. And even if I've been trading for 40 years, and I'm still going to look at getting better every day. And it's not to say that I need to go reinvent the wheel, but there's certain things that I notice. Like on our CWAP trade, we took a few stop outs. And so I go in and look at those. Well, what happened? Is there something similar to what happened yesterday that happened in the past 3 months that we never paid close enough attention to? And there is something, and I'm going to go fix that. And I've already done testing on it, and I'm already all over it. And just because that's my best strategy and it hits 75% of the time doesn't mean that there's no room for improvement. Like, if I can avoid more losing trades, sign me up. Because I would have avoided all 3 of those trades yesterday. Sure, we would have been bored out of our minds, but better to be bored than to be broke. I think even I think somebody even said, we have a scanner so you can find trades. And I'm like, yeah, but these are my markets. This is what I trade. These are my strategies. I don't deviate from that because it pays me. Why would I do anything different? So when you find something that works, stick with it. But always focus on getting better. How do you improve without reinventing the wheel? Again, a lot of traders get stuck in shiny object syndrome. And I know a lot of, even, those of you that I've talked to in the room here, I hear it all the time, always looking for the next thing, always looking for the next tool and the next gadget. And this is kind of like throwing myself under the knife a little bit here. And because we're a development company, we develop algos, and we're going to continue to develop algos. Spoiler. So there's always another tool coming. The question is it better than what you have? And is there any need to change? If what you have is working, don't change it. Like, do you want to add something to what you're doing? Great, go for it. You have a portfolio, you have 3 to 5 algos. You want to add one more and see if that can, make the cut, so to speak, right? Like, you're putting your starting lineup in, and you need to know, is there somebody who's going to, come off the bench and really kill it and light things up for you on the markets? And if you've got somebody on the sidelines who deserves to be in the game, then put them in the game, right? But focusing on growth is not just about getting better with optimization. Your entire focus, I would like to think, is even more involved than somebody who doesn't trade with algos, because somebody who doesn't trade with algos isn't worried about what the algo is doing. They're just trading their strategy. They're focusing on their own growth with discipline and mindset and executions and all of these type of things. It's the same for algo traders. Like, you still want to focus on being the best possible trader out there, because you're going to trade even better with the algos. Like, I think if you give an algo to somebody who's been trading for 20 years and who is successful, and you give that same algo to a trader who's been trading for 2 years and is not successful, I think we can both agree who's going to make more money in the long run. And you say, well, that's an algo. Why should it be any different? Yeah, it is different. It just is. And that's why you're here in this event, because you're looking to be the best. Otherwise, you wouldn't have paid to be here. There's no substitute for education, none whatsoever. So focus on improvement. If things hit the fan and they are kind of stinky and disgusting, I'll keep it PC. Focus on your improvement. What happened? What could you do to make things better in the future? Is there something that you did that you could have done better? Again, who's the tool and who's the trader? If the algo is the tool, then you're the trader. If the algo is the trader, then you're the tool, right? So use it as a tool, but you're the trader. You're the one that tells it what to do, where to do it, how much to risk, all those type of things. Don't wish, find education, find ways to get better. Stop wishing, stop hoping, definitely stop whining, because nobody wants to hear you, and go to work. Go to work. If you have a tough day, okay, whine for a day. Then come back the next day, no excuses, and get to work. Find a way. Maybe you need a day to, kind of clear your mind and you feel like crap for a day. So be it. There's always the next day. You can come back and get to it, right? So always, focus on getting better, whatever that means. There's a lot of great resources on mindset stuff, meditations, and even hypnotism. And you might think, hypnotism, wow, that's crazy. No, it's not quite what you think. And it can actually do a lot of really great things for you. Really what it's doing is it's tuning into your subconscious, which is in control of your fight or flight responses. And the more that you can kind of get that under control, the better trading is going to be. Because when you're in fight or flight mode and you're trading, I don't care if you're trading with an algo or not, it's going to be a disaster. So you want to be able to still control your emotions. Algos will help you with that because it's not all on you necessarily. But you're still going to have emotions. You can't get rid of them entirely. It's not possible. So again, we go back to have realistic expectations. Again, the algo is the tool. You are the trader. Mindset absolutely 100% still matters. You would maybe not think that, right? It's maybe a little bit of an outsider idea that, well, why would my mindset matter? Because it's the algo. The algo is going to trade whether I think something or not. Yeah, but you can turn it off. You can turn it on. You can set max limits for the day. You can avoid blowing out your PA because the thing's just going haywire and the markets are nuts. You can avoid trading into the news. And if your mindset is garbage, you're just going to have a negative outlook on it. And the first sign of a bad day, you're going to throw it all overboard and say, this is garbage, I'm out. And you just can't think that way, you know? So mindset really absolutely still matters. Absolutely it does. Patience, patience, patience. How many of you have learned patience in the markets? Anybody here learned patience? How many of you are still learning patience in the markets? How many of you have seen what happens if you are not patient? Anybody see what happens if you're not patient in the markets? Yes. It ain't pretty. You know what it looks like? How do you know if you're being impatient? You're blowing out evals. You're blowing out accounts left and right. You get into a drawdown and it gets worse. You revenge trade. Yeah, all those things. By the way, there's a lot of people saying yes. So I know you can't see the text, but yeah, patience is what will get you paid. There's a few things that go together and they're really all on this slide. What gets you paid as a trader? Patience combined with proper mindset. Would these two kind of go together? Discipline. How do you get all of these things? Mindset. This controls patience. It also controls discipline. Because if your mindset is right, then you're not freaking out on a losing day. I had a losing day yesterday. Did I freak out? No. Was I disappointed? Yeah, of course. Was there some emotion? Yes, of course. I'm human. Was there a lot of emotion? No. Why should there be? I can't control the outcome. I can control what I put into it. I can control my preparation and execution. I was prepared yesterday. I executed right. So I did my job as a trader. Today, what can I do about that? Can I prepare more? Yes, which is exactly what I did. Went through and looked at more examples on those specific trades on how can we make it better. So that is part of the preparation, but it all comes from the proper mindset. If I say, well, yesterday was just terrible and the markets are out to get me. Well, guess what? If you think that way, then you're right. If you think the markets are out to get you, congrats, you're right. If you think that it doesn't matter if the markets are out to get me, everybody's here to make money. My job is to not worry about what everybody else is doing. My job is to get paid. Do I care if somebody else made money or not? I'd be happy for them if they did. Will I be sad for them if they don't? No, not necessarily, because I don't have feelings. The market took those away a long time ago. No, but my job is to make money as a trader. My job is to help our traders make money. That's my job. So if the institutions made money or not, do I care? No. Do I care where the institutions are trading? Technically, no. Really don't. Do I think that the institutions never put on a position that ends up in the red? Of course not. Of course they do. You think they don't take losses? Of course they do. They just don't take losses in the long run, probably. So anyway, so these are all things that go together and it all stems from mindset. So this is the most important factor to your trading is your mindset. Because this controls everything. Controls your discipline. It controls how you interact with your tools. It controls how you trade. It controls whether or not you blow out your account. It all comes from that. So it's all in your head. Oh, crap. We're doomed. No. No, but think positive. And I'm not one to say that, oh, if you think positive, you'll always end up in, yeah, no. The markets are the markets. You can think positive as much as you want, and you could still have a losing day. Trust me, I know, because I have a positive mindset and I still have losing days. It is what it is. But I can tell you that I always come back. I always come back ready to go, and I don't self-sabotage because the mindset is clear the next day. So what does patience look like? Patience looks like this. Draw down. Draw down. That's what patience looks like. If you don't have that, this is what your accounts look like. Da-na-na-na-na, 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 and you keep losing accounts left and right. If you're not patient, because what happens is you get here. And this trader is now sizing down their position. They're saying, no big deal. I'll find my way out. Give me a few days. I'll be out of this. No problem. New high watermark, making money, getting paid, living in the green. Everything's awesome. This trader said, oh, crap, I'm in the red. I keep going. Oh, crap. Now I'm really in the red. Oh, my gosh, my max drawdown. I might hit it. You know what? I might hit it anyway. So who cares? I'm just going to keep trading. Gone. Next, I'm going to go buy another eval, see if I can pass it today. Next. Well, that really sucked. Now I got to buy another eval so I could trade tomorrow. Sound familiar? That's what impatience in trading looks like. So slow down, take your time. Good things come if you're willing to work for it, if you're willing to be patient, if you're willing to put the work in, if you're willing to become better at what you do, the money follows. It doesn't happen overnight. It doesn't come easy. If you expected trading to be easy, I will gladly pop that bubble for you as fast as I possibly can. If you think trading's easy, good luck. Hope it works out for you. The ones who make money in trading are the ones who put the work in. So at this point, this is most of the curriculum that I had planned for us. I think what we'll do is we'll spend more time going through the algos and going through an example of, building something out, and we'll kind of work together on that. So that'll give us a chance to put some things together. Frankly, this went a lot faster than I was expecting. All of the curriculum to go. So it's not a bad thing. We'll find ways to go through some more examples. Yeah, exactly. That's perfect though, because it's better to see it in action anyway, right? So why don't you? So let's take a quick break. Not real long. Let's come back at 3:25. I just want to check a couple things, and I'll be right back. And we'll come back and go through some scenarios. Okay, I'll be right back. So give everybody a second to make sure everybody's back, and then we'll jump in here. We'll do a totally different example. We'll just start one from scratch. So let's go ahead and make a copy of this, and that's fine. JSON build thing, create a copy. That over here, and we're just gonna call this test. Cool. Settings, don't know. Don't even know what we're testing yet. Let's get rid of this as well. Maybe. Maybe. There it goes. Cool. Okay. So let's pick an entirely different algo. I thought about using, we have a new algo coming out. Of course we do. I thought about using that one, kind of kill two birds with one stone and start looking at it, but I want to keep you in suspense. So I think we'll wait for the launch on that one. But somebody throw out a different algo that you want to check out that's not included in this list. Throw some ideas out. I will somewhat direct us on which one we're going to look at, but we'll get some ideas on what you guys want to see. So Weibo is, the problem is we're seeing different results from one computer to the next. It is volume based, and that can sometimes be an issue. So if you do run with that, just be cautious on running it in sim first to make sure your results are lining up and that everything's good to go there. So I don't want to jump into that one just because it might be different from what you'll see. Potentially, maybe not, but just to be safe. So ready, set, rather see CWAP. Yeah, ATR vol is a good one. We had the matrix as an idea. The price action ones, I like the price action algos for certain things personally, and this is just my own point of view. I like them for certain things, and I think I like some of the other ones for more of the set and forget type. So we've got a VWAPper, ATR vol, matrix. Let's do ATR vol, and we might even have time to do VWAPper. That was actually one that I thought of. Let me make sure if I have that one on here, because I don't keep them all on here because I don't use them all the time. I'm going to close out some of these charts as well, just because it's taking bandwidth from Ninja. Oh, that's why. Our back test is still going. So there it is. Got about 5 minutes left, supposedly. That's why Ninja's running so slow. It's like, what is the deal? Bear with me here, guys. There we go. Let's go to cancel that for a second. Actually, I'm just going to close out our back test because we already know what the results are anyway. So let's do that. Close you. It's thinking. There it goes. Sweet. Everybody start cheering for Ninja. Maybe it'll start working for me here. Let's go. All right, I'm gonna restart Ninja just to be safe. Save us some trouble here. We'll have to give it a couple minutes to get reloaded here, so bear with me while I do that. So I don't have VWhopper on here, so let's start with ATR vol, and then we can expand that out. Actually, I do want to do VWhopper because I'm actually more familiar with that one, and it's kind of old school, so we're gonna run with it. We're gonna look at VWhopper. I have to install it real quick, assuming that I don't have any issues on my stuff in Ninja, then we should be good. We'll see how it goes. While we're waiting on Ninja, what I'm going to do is we're going to look at VWAP itself while we're waiting here. Okay, so this is the daily VWAP, and get rid of these. We can get, so this is the daily VWAP, and there's 3 excursions. Let me turn off the EMAs too, just for the sake of it. So what this is doing is I've got it set to 0.3, 0.6, 0.9. Normal standard settings are 1, 2, and 3 on the deviations. I'm gonna go a little bit tighter on these, and we'll see how it interacts. You know, as it is right now, obviously Russell put in a huge flush off the open and stayed inside most of the day. So trading reversals out of the 3rd level would have been a great way to trade today with that market. On the other hand, if we go to NQ, you know, really, we didn't get anything out of VWAP unless you had wider bands. There was one at 9:30 off the open, and that was it. So there wouldn't have been any trades there. ES would have gave you one down in here. And then CL we can go look at. Get rid of these for us. CL would have been, you know, off of the open, would have had maybe an opportunity here, and then potentially something here, but that was, you know, you wouldn't have traded that because they had the inventory report today. So, so we'll take a look at it. So let's go to import VWhopper. Ooh, yeah, that's a great idea, Dean. We'll do that. Absolutely. VWhopper 3 point. Jeff is the July. Oh, that's last year. Never mind. Yeah, we're good. So let's go through the algos. So Dean had a great idea to go through the algos. What type are they? How do you choose which markets to trade them on? So let's go through them. I go in here. Success. All right, great. We go to the algos. ATR vol, pullbacks, and let's look at it. So you've got pullbacks and you've got breaks. So a couple ways to trade with this. when you're looking at this, you would want to be ultimately trending markets, but technically this is a reversal of sorts. What I would do is if you're trading reversals, trade it manually. There's divergence in momentum, trade the break. If you've got momentum on your side, trade the retests and trade the trends. If you've got divergence in momentum, trade the shorts, trade the reversals. So you can use it as a reversal, but primarily it's a trending system. Okay. I will say most all of them, you can trade trends. Alpha price scalper is price action. There it is. These are going to be, yeah, scalp price breaks. And this one is trading the break of the high. I think, realistically, ready, set, and the new mega bar thrust breakout, these are going to be maybe better selections compared to this one. It's not to say you couldn't do well with this, just my preference would be some of those over this. But that's a scalping system. This one, in theory, would work on anything. CWAP is best on NQ. After tons of testing and tons of trading, this one really is the best on NQ as a market. Trending system, trading pullbacks, only trading pullbacks. NQ is the best. Anything that is trending, though, you can get good results with. If it's not trending, that's not going to be great. So then again, you look at it today on MNQ and it wasn't great, and NQ was very trending. So I don't know. You'd have to look into it and see. Engulfing is great. This is, again, price action. This is going to be trading when the bar is obviously engulfing the body of the previous bar. Nice little setup. When there's a lot of heavy volatility, this one kills it. Absolutely kills it. So like the other days when there was tons of volatility in the markets and they're sweeping left and right, this thing just had a field day, man. It was killing it. So anytime when you're seeing markets that are very whippy or high volatility, or they're sweeping out a lot of levels, engulfing is your go-to. You kill it with this one on those days. So chaos days, engulfing's your way to go. This one you can trade on anything for sure. Markets that tend to go in and sweep a little bit more might be good. Even like an ES is kind of notorious for that. So that could be a good one. Inside bars, outside bars. I never really got too far into testing on this one, but 5 minutes and up, I think, is the way to go for me on these. I think 5 minute and up is good. This is price action. It's a breakout trade. So very, very directional. Only traded on directional markets with valid range. Tight ranging markets, you're probably not going to do too well on this one. Markets, not really probably anything. I will say, MNQ is probably the easiest to test on all of them, really. So Matrix, you got the 3-1-2 and the 2-1-2, the Chicago and New York. Those are going to be my favorite patterns, the Matrix. So it's based on bar numbering systems. 2 is directional, 1 is inside, and 2 is directional. So you've got a directional bar down, inside bar, directional bar up. Every pattern ends with 2, by the way. So it's this one is directional and then inside. And then you trade the break of the high. The 3-1-2 is the Chicago special deep dish. You got an outside bar, inside bar, break. Outside, inside, break. And that's kind of what it looks like. So this one, directional is going to be good, but you can get away with reversals on this too in the right locations. I think if you're trading reversals, here's my thought on, and this goes for any of the algos. If you're trading reversals, location, location, location is your ally. You need to trade based on location. On reversals. On trends, you need momentum. Need momentum on your side. Unfortunately, there's not a way to filter for divergence yet. Maybe someday. But momentum is going to be your ally for trending systems. Matrix, you could definitely trade reversals or pullbacks on this one. Pin bar, reversals or pullbacks, especially. This is a really great system. The pin bar is kind of like an OG of price action. It's solid. It works. NQ is a good one. But we had pretty decent results on all the markets. My philosophy on minutes versus volume charts, you guys kind of know 3 minutes and up, you're good on time charts. Anything below 3 minutes, go to volume. Go to a volume chart instead. It's too choppy. So stick with a 3 minute and up. Any market is fine on this one. Ready, set. Reversal pattern all the way. Reversals. Here's the thing too, is you could sort of combine. I have this idea. I'm not going to go into it anyway. You could, when you're coming into a level, you could flip it on to take reversals and go, yeah, I'm going to take an engulfing pattern or a ready set or whatever, whatever flavor of price action, pin bar. Any of these will do the job on a reversal at certain locations, especially. But ready set is a good one on pullbacks as well. Yeah, you could use it on any of those. I like, let me see if I can pull it up. Let's go into it. For this one, I like when it's sweeping the high or low. Let's see. Okay. So you see how this bar, the high gets swept out and then it closes inside the body. That's the best setup in my opinion. Sweeping the highs and then coming down. So those are the ones I like the best. This one, if this wick was a little longer and it swept the low, closed inside the body, that's a great trade. So that's the way I like to trade it. So to give you some direction if you're using that one. Springboard. The best kept secret. I swear it's like I have tried and tried and tried to promote this thing like crazy because it makes money. But I don't know. I don't seem to get too far in my promotion of this one. This is a really, really great way to trade. Really great. Location-based deployment. Some of you that are in Gap know what I mean by that. Location, well, some of you that were in the Algo event know what I mean. Last month. Location-based deployment means that you are turning it on and off when you come into an area of interest. So let's say, you're coming into, this is a level you are interested in trading because it came down and put in an order block here. And so when you get to that level, you want to trade it long. Okay, great. Say this is your hint VWAP for the day. Market's coming into VWAP. You say, I want to take a short out of VWAP. There's your trade. Springboard is fantastic on location-based deployment. You can optimize it. You can get good setups on it. But I really like this one on location-based setups. Man, there's so many algos. Thrust breakout is a breakout trade. Very, very directional. Don't try to trade it if you're not directional. Extremely, extremely good on crude on a 5 minute. NQ as well. And I have those templates for you. They're actually in your packet for the week. So very, very solid. You won't get a lot of trades, but when you do get them, they're good. They're very good. This is a breakout trade. I would stick with MNQ and MCL on those, or NQ and full size CL for that matter. Very, very good. But 5 minute charts, 5 minutes. Vebo works with anything that has range for the day. If you don't have range, you're not going to make money. If it's a tight ranging day, forget about it. Don't even try it. If you've got range, run it. It's a breakout trade. Breakout with volume. So it'll work on anything. I like it on range bars personally, but That's how I've always traded this setup, is on range bars. So, because I used to trade this before there was an algo to do it. Great system. It'll work on anything. I mean, everything has volume, so I don't see why it wouldn't work. I would be more inclined to trade this on gold, crude, and the Russell. Those would be my top 3 picks. If I was going to pick one to run with, those would be the 3 I'd go with first. See if you can get something out of those. Delta algo is an order flow algo, kind of complicated, to be honest with you. It's pretty tough to optimize. HFT, there's 2 ways you can trade this. In my opinion, there's 2 ways that work best. Stacked imbalances work great on ES. There's a lot of volume, works great. You could certainly trade this on ES with stacked imbalances. Location-based is my take on it. Do you have to do it that way? No. That would be how I would trade with it. Location-based. So you could use it for confirmation. Say you're trading out of VWAP. Turn it on. If you get the signal, take the trade. Let's say you've got a CWAP that you're doing manually, and you want to know if it's responding to the CWAP. Turn on the HFT. If you get the signal, take the trade. It's great. The flush reversal signal on crude. Very, very good. Flush reversals on crude. Very good setup. Full size crude. Don't do the micros. Full size. Not enough volume on the micro. But that's an order flow algo. Auto fibs, support resistance, non-directional is going to probably be the best in theory. You know, oscillating markets, that kind of thing. So support resistance. Yeah. Markets, actually gold's probably a great one. Crude is probably a good one. Probably stick with those. It's not to say you could actually do well on NQ as a scalp with this one as well. Try it on a 40 range on MNQ. See what happens with you there. Unizones, supply and demand. I like these setups a lot in the right conditions. I like them a lot. They work very, very well if you trade them in the right locations. The algo doesn't know if you're trading into major support, resistance, and so on. So, you know, I think personally, higher time frames, you could trade the traps, which is this is a fair value gap. This is what the trap is. We have order blocks built into it. We have supply and demand zones built into it. What I would do if I were trading this is turn it on directionally based on market structure. I mean, technically the system will do that for you, but I like to just do it manually. Turn it on based on the direction, and like, here's my thinking. Okay, I'm just going to break this down for you real quick. If you're trading long and this is your current location, where do you want to trade long? 1, 2, or 3, or all of the above? Multiple choice. Where's the best location to trade long as of this point in time? What do you guys think? Some of you Gap members better nail this. 1 and 2, Curtis says. Mark says 1. What else? What else do you guys think? Anybody else got to say on it? 1 and 3. Marshed. Daniel, 1. Yeah. Good. I'm glad most of you are saying 1, because this is the nearest support location. This is where you want to first trade. But 3 is the strongest, actually. Why is 3 the strongest? Think about supply and demand. Where is supply the strongest? Where is demand the strongest? Demand is strongest at the lows. Supply is strongest at the highs. So you trade supply at the highs, you trade demand at the lows. But you can also trade trends coming in off of a support level like this, off of the number 1, which is the most recent pullback. Market is likely to test that and give you a quick pop. Now, you don't need to trade it past the highs, but you can get some really great trades on the way up. So that's my take on this one. Really a great system. I haven't spent a ton of time optimizing it because I found it to be a little bit difficult because you have to kind of pick what you're doing and where you want to trade and so on. But if you're savvy enough to know, okay, this is a valid pullback, my structure is up, set it to go long in that location, you're going to do great. You can do really great with this algo, kind of turning it on and off. Like I say, I haven't spent a ton of time optimizing on this one, but that would be how I would trade it personally. I think you'd get the best results that way. Hybrid, gold, NQ. This is kind of like the lower high retest, higher low retest. Those are kind of the best way to trade this one. Would be the wick retest, would be this one. So you see how it comes up, comes down, and then you get a good push before it comes up and tests these highs. That's what that wick is. And then when it comes back down, it enters the trade short there. Kind of a unique setup, actually. And I think gold and NQ would be great on that. But technically, you could use it on anything. That's a reversal of sorts. So, yeah, you'd probably want to stick with the direction of the day and then trade it on smaller time frames in that direction. Pattern Finder is a breakout directional system, really great out of divergence. If you look here, you can see there's the divergence, there's the long, beautiful trade. So it's great out of divergence, but you do have to manually kind of approach that, you know. But it can work well. I like it on crude. I like it on Renko bars. I think Renko bars are probably, in my opinion, the best way to go. But crude is really good on this one. What else do we got? Risk reward entry is just an entry algo. It's pretty cool, actually. It enters based on your risk reward multiples and it auto sizes your contracts and all of that, which is pretty slick. Trend stepper, it's a trending moving average crossover. If it's trending, it'll take longs. If it's not, you know, let me see if I can find some trades on this. I don't know why they don't have trade images. Weird. That's kind of strange, huh? I don't have any trade images on this one. Might have to fix that. Anyway, you see how these cross right here? So the stepping average crosses under this other moving average. That's what the signal is. So when you get the cross, it'll enter the trade. Very trending, good on ES, NQ, RTY, anything that's trending in nature. Volume divergence, great on crude oil, range charts. 10 range, probably the go-to. Can do really well on this one. I like it on reversals, but you have to turn it on and off manually for reversals. You can trade it directionally, but I like it better for reversals. This would be one that's kind of location-based deployment or based on coming out of divergence. Works really well coming out of divergence. Kind of another similar, like you could use this and HFT as actually a signal. Yeah, you can do that. And then VWAPer, which we kind of started to look at, which is levels. You could trade reversals or trends out of this as it interacts with the VWAP. We'll go look at that one together. So that is the exhaustive overview of all of the algos. Now you know. Now you know everything. So let me reconnect and we're going to dive into VWAPer. No worries. Waiting for Ninja to reconnect to data. Yeah, no worries, guys. Glad to cover it. Okay, let's go to a chart first. We're going to start with VWAPer on MES. So we're going to pull up our ES chart. There we go. Do like so. Let's get like, yeah, 5 days is fine. Look at it go, man. It's just, dang. Wow. I'm so glad I traded the break of the 830 level here and traded it all the way down. Said the me who was able to go back in time and trade the break at 830 going all the way down. Jeez. What a trip, man. That's crazy. Okay, anyway. Shiny object. Let's go in and add VWAPer. Bars between signals, 2 max signals per level. I don't care. We'll go 10 for now. 1 back test. 10 ticks is fine. Actually, let's go 8 just to make it a little quicker. Don't care about the trade time yet. Actually, I do. Let's go. Stick with 830 to 230 as a starting point. Oh, I didn't know we had structure built into this one. I hope I'm on the right version, Jeff. Does this version work? Before I get too involved.
Yeah, let me check the version.
It's the version 12, I think. Where was it? Oh, there it is. Yeah, version 12. I might have started doing some updates. This might, I don't know if they've tested this, guys. I just pulled the most recent one and didn't realize that it was updated. Okay, well, as I load it up, here we go. Cool deal. All right, so first let's go over what it's doing. So it is trading anytime the candle is touching the level and it's a bearish bar, there's your entry. Touching the level, bearish bar, entry. Touching the level, bearish bar, entry. Stop was too tight, stop's too tight. Stop is definitely too tight. This one, it is a bearish bar and it's touching the level, so it did enter. It didn't come back up into it, but that's still a trade. And so is that. Really tight stops. But that's what it's doing. So you can set it to go either direction off of these levels. So let's say you are, trending and you only want to trade longs above VWAP. You can do that. You can tell it that only at this level and this level and this level and this level to only go long. But if you're down here and you go long, those would be reversal trades. So you have the choice on how you want to interact with these levels, which is really pretty cool. So let's take a look. So we caught one there and then there. Let's look at it on a 3-minute. Couple trades there. Day. Obviously, the shorts were in play today. Yesterday, nice one there. This one took a stop, but tight stops. That's why I like fixed range bars on this one, I think, because the stops are sized based on what the bar is doing. So let's look at it on a 10 range. And then we'll check it on a Renko as well. Probably stick with a Renko, to be honest. Let's expand the stops though before we do anything else. So this is literally the approach. Go to the chart, look at it. What do you want it to do? What is it doing? Is it behaving? Is it not? I'm going to set this to both so that it interacts both ways with all the levels. And let's go to 12 ticks for now. Cool. Better stop. That works. I'm surprised it took a long. That's crazy. So now you can see how it came into this level, took the long out of it. That could have been a really nice trade. had we hung on for more. This one tried to get long because it was interacting with this level, and that didn't work. This one tried to get long here, though, and got stopped out. You can turn any of these levels off or on, or either direction. So as a hint, if the VWAP is sloping up, you should probably take longs. If the VWAP is going sideways, you should probably trade reversals. If the VWAP is sloping down, you should probably take shorts. So cool. All right, let's look at it on a wrinkle. Wrinkles are easier to see. A lot cleaner. Cleaner trades too, by a long shot. Wow, looks good. Yeah, we're gonna run with it on Renko. This is normal because you usually need at least a day or two before you can start getting signals. Is there a way to limit that, Jeff, to where it only takes trades if the VWAP is fully there, like this, after a day?
Well, our approach to that has always been to load more data, but what are you saying? You're saying
So what I'm trying to do is like set it so that there's a, I don't know, like a minimum data before it starts taking trades. Because you see how that VWAP is not fully
well,
there
you can
until
do
a day
that in
later.
the algo settings. There's a
Yeah.
number
Okay.
of bars to trade before
Yeah.
you can trade,
So let's look and see.
or just load more data, more history.
Yeah, I just don't want that first day to really, I guess we could just ignore the first day of back testing because it's not really valid. How many bars do I have here? Let's look. Ruler is here. Dang it. Okay. So let's zoom out. Holy smokes. Got 1,600 bars. Yes, you can set them to show trades, but not execute. You can do that. You would do auto disarm and you would have it set to show the signals, but not trade. That's why we did that actually. It's for that very reason. So, so let's go to the strategy analyzer now that we know what we want to run this with. And let's go to VWAPR. All right, so we're going to set it to both to start. Bars between, max signals, tens. I like the tighter deviations. Reason I'm setting it this way is because ultimately this is how I trade. I have my VWAP set to 0.3 and my anchored VWAP set to 0.6. So I'm going to run with it. Stepping size, I'm just going to go 1 because I don't really care if it's stepping or not. Market orders, long and short, allow entries, that's fine. Let's go 12 and 12. I'm actually going to stick with, from a optimization standpoint, I'm going to go from 10 to 11:30 because that's really the time that I want to optimize it for. If it happens to work on other times, great, but I don't want those times to impact how I'm trading it, if that makes sense. Ooh. The time frame minutes, you do have to go minutes. You only get one EMA. So I'm actually just gonna leave this off because we're trading based on VWAP anyway.
By the way, I'm showing version 11 as the currently released version, but you should be fine with that one.
Okay, cool. MES, Franco, 482 is cool. We'll stick with that for now. Let's go back to June 24th. Let her rip. We always notify everybody by email if there's an update. It's not very common though. I suspect there will be as we get in tick plays, obviously, but that'll be a little bit yet. So we got 182 trades to work with. So here's again, this is kind of a starting point. So we can go in here, we'll save this as starting point, and that'll be kind of what we go with. So what kind of things could we look to optimize here? Obviously, we're looking at the interaction at each level. That's the primary thing. The rest of it really doesn't honestly need to be optimized, which is kind of why I picked this one because it's easy to work with. Let's just go straight into optimization. And what we're going to do is we're going to optimize the levels. We're going to go optimize for level 0. We're going to optimize for this. So both reversal or trend. Now, I'm going to do only these two to start with. I'm going to turn these other ones off. And you'll see kind of how I go about this on this particular algo. Okay, bars between signals. Dang it. I'm going to do this again. Bear with me. Screw it. Let's go 20 because I don't really care how many max as of yet. I got to go in and now let me just pull up the template. This will be easier, I think. Let's go optimization. Okay, well, let's do it again. Optimize 1, 2, 3. Off. Okay. Cool. Good. Good. Great. So my reversal bar is set to 8. So I've got it set to 12 ticks. I can always go in and, modify stops and targets later. But for now, I want to see how does it interact at 12 ticks either way at each level first. And then I'll go in and do some modifying from there. So always start with the algo parameters first, then go into filters, then go into stops and targets, and then go back if you have to. And we'll set this to max net profit as well for the next test. So this is telling us that level 1 is set to false. And level 2, let me do this so I don't have to keep going back and forth. Okay, so level 0 is false. Gave us the best numbers. Level 1 was set to reversal. That gave us the best performance here. So we're going to go with those. And then we're going to test. Now I'm just going to go in here and do this and this. And go through each one of these and check them as we go. I'm going to turn this to false, since we know that's what we want to do anyway. Now I'm going to test level 2. I'm going to go both. Off. Reversal. trend. Run it. So level 2, level 3. What are we going to do with this one? Okay, less trades turned out to be better on this one. It's about the same return. Don't worry about dollars and cents right now. We're just looking at profit factor mostly and then drawdown versus. So this one is the best with it set to trend at level 2. So just go trend. Level 3. Yep. I'm going to run level 3. Pretty quick. Doesn't take too long to do this one. And really there was no profit at level 3, so we would just leave this turned off because there's no additional profit. So we do that. So we're going here. I'm going to go ahead and check all these boxes in this case. Okay, level 2 was trend. So go trend. And then turn that off. And then level 1 was reversal. So we'll go reverse. And then level 0 was false. So now I'm going to run them all together. Oh yeah, I got to optimize always one thing. Let's go to max signals. We'll test for that since we're at it. We'll go anywhere from 1 to 20. Shouldn't take too terribly long to run that. Let's see if there's much of a difference. Try that again. There it goes. And then once we get through this, I'm looking at, is there any advantage to turning on the VM system? Is there, what's the best target and stop, and that's really about it for this one. Okay. So max signals 3 came in as the best. Really not much different from any of the other tests based on that. So it's probably not really getting more than that. Let's see, 3, 6, 5, 13. Yeah, so anything above 3 is really not making a difference. So I'm just going to change that to 5 because I don't really care how many times it trades it. So we'll go to number 5. You can see there's not much of a difference between those anyway. So we'll leave that at 5. That's locked in. You could go through and optimize the deviations and see, is it better to run different numbers on. I'm not going to get into all that because I kind of know that that's what I want it to be, and I'm not going to really mess with it. So let's go into VM lean and see, is there any advantage to having VM turned on? Nope, no advantage. So we'll keep it off. VM off. Right, now we're going to go do stops and targets. So let's go here and profit. Okay, stop loss type. I got ticks and ATR on this one. We'll keep it to ticks because we have a fixed size bar, so that's fine. Let's go at least 12 to 16 by 1. Hell, let's go 24. Let's make it by 2s. And then profit target. What do we got here? We do have risk reward. So I'm going to do that because that's a lot easier to test. So we'll go 1 to 1. Let's go down to 0.8. Oops, not 0.08. And let's go to 2.1. Okay. Before I do that, I want to go look at what this looks like. Net profit. Okay. Cool. Let's go half hour a day. Yeah, fine. Alrighty. Let's run it. So we got 91 tests to run here. Shouldn't take too terribly long though. So while that's doing that, let's start building out our testing sheet. So let's do that. That's fine. So we got level 0, level 1, level 2. This is just going to be off or on. This is going to be, obviously all of these are going to be, there's going to be reversal, trend, or both. So you could just, kind of merge these and copy that over to all these. Stops we did. What was our range? Yeah, 12 to 24. Oops. By 2. Targets is going to be risk reward 0.8 to 2 by 0.1. So pretty straightforward there. Really VM is going to be off. Another thing that you could do is you could say 1 is on and then set 2, 3, and 0. Sorry, 0 is on. And you could set all of these to trends and then turn the VM on and see if you get any better results with a trending type system with the volume, velocity, momentum on. So that'd be a cool thing to check out. So we got our numbers back. Let's go to summary. What do we get? 530, 1.84, 50% profitable, but we have a bigger risk reward average. So we came in at 18 ticks, kind of right in the middle. The next one, the stop was 24 with 1.6, 18 with 1.7, 20 with 1.9. So we're definitely in the right range. 18 to 24 is probably a better range, so we can update that. Let's go here and go 18 to 24. Target was really, it's favoring the larger targets. Not seeing anything too close to that 1-to-1 mark. Yeah, 2-to-1, 2-to-1. Yeah, I think, even chopping down this to 1, and then we could even go bigger. I mean, might as well. Let's go to 3. See what that looks like. So let's update it. 18 to 24. And then we'll go Let's go 1.5, just because we know in this case that anything below that wasn't really cutting it anyway. So let's run it this way. See what we get. So we can start tracking these. We know that this one was, this is actually, we're kind of technically over here, but that's fine. Just an example. We had level 1 was reversal, trend, off. And then we'll fill in stops and targets here. Yeah, this is set through today. As you know, we always talk about you try to start with about 100 trades and then filter down from there. But you want to start with enough trades to where you actually have some data and you're not just going based on a fluke, you know? Cool deal. All right, we're back. So here's what you want to do. You want to look at these numbers and see, is there, look at the first few of them and see what does the drawdowns look like? What does the profit look like? What's your profit factor? Factor all these things in because this one shows the most profit, but this one has a better profit factor and a lower drawdown. Now, it didn't yield as much money technically, but there's a lower drawdown. So obviously a lot of what we're trading is going to be based on that. The rest of them, this looks the best to me out of this run. So I would go with this one. This would be the one that I would use. And so we've got 18 profit factor 2.1. So I suspect that some of these are going to be 8. Yeah, this is 1.8 at 18. This is 20. And 3 profit factor. 24, 2.4. 1.6 at 24. And this one is 2.5 at 24. I like the tighter stop at 18. Let's lock this in at 18. And then just for fun, I just want to look at 1.9 to 2.2. I want to see how different they are comparatively, just those three. Yeah, pretty decent difference actually. So this one was the best, obviously 2.1. Then we had 2, not quite as good, and then 1.9. So there's 53 trades. So I think that's enough to go, okay, yeah, 2.1 is probably the way to go. What is 2.1, right? So we look at 18 times 2.1 is about 38 ticks. So you can always go into ticks if you really want to fine tune it from this point and say, 32 to 40, something like that, and really dial it in. But I'm not going to worry too much about that. I'm just going to leave this at 2.1. Okay. Let's take a look at Dailies, losing day there, another losing day there. Yesterday, 2.1 is the profit target, risk reward. So that looks good. Let's go to the cumulative. Pretty decent. Let's go back here now and go to back test. What the heck, man? There it goes. Okay. Now, what I'm going to do is I'm going to expand this out and see, is it going to be profitable any other time? So let's take a look. Roll deal. Okay. 10 o'clock, clearly much better. 9:30, no bueno. There's really not any times before that that would make me, really go crazy. 8:30 is not great. 8's not good. 7:30, there's only one trade, two trades. Yeah, there's nothing there. So 10 to 11:30 is the best, although we did get some opportunity at noon. This one was 7 trades. This didn't do great. So let's cut it off at 12:30 actually. And we'll go 10 o'clock. So we'll save it that way. Let's run it one more time. Oh yeah, sorry. Yeah, that's a good point. Didn't catch that. You think, I wish they would just default to entry time, but whatever. We'll open it up again and see if there's anything good in the pre-market. Just a little bit. Yeah, no. 9:30 had 21 trades, but it's really hit or miss. So we'll stick with the 10 o'clock. Run it there. Okay. So 1.8 profit, 112 to 665. That's good numbers. 2 to 1. And so let's go ahead and size the risk now. So now that I know that this one doesn't give you the fixed position sizing based on dollar amount. So what we're going to do is just take the risk amount that we normally size it on and divide the largest losing trade. That's going to put us at 22 contracts. So I just come up here, go to 22, run it one more time. Now we'll get comparable numbers and we would fill them in here. Now, obviously I'm looking at the most recent first. I'm doing that on purpose, actually. Yeah, there we go. Well, that's good. 2,500, 14, really good numbers. Yeah, it's great. Cool. Okay, so let's save it again. So why would I optimize current first and then go back in time? Really what I'm doing initially is just figuring out, what do I want to run this on? What market? What chart? What time frames? What do my stops and targets look like? How many contracts do I need to trade? Now I know that. So now what we're going to do is we're going to go back in time. We'll set this to, let me save it one more time, just to be sure. I'm gonna go back to, let's go to June 28th. It's fine. I don't need to go all the way back. And then we'll go June 3rd to June 28th. First thing I'm gonna do before I optimize anything, I'm just gonna run it the way it is. If it's really good, I don't need to optimize it. If it's not, I need to optimize it. Okay, not good, right? Breaking even. So I need to optimize. So what am I going to optimize? What we're going to do is go to optimization. It did not carry over, so I'm going to load this again. Now I've got all my stuff in here. And we'll go, actually, let's go to optimization. Yeah, there we go. Open these up. Change the dates, change to net profit. Go to 621, 628 actually. It's good enough. 6.3 net profit. I'm going to save as MES optimizer. Saved. Now what I'm going to do is I'm going to go to optimize both, reversal, trend, off. I'm going to check all the boxes. Cool. Going down. It's fine. Okay, let's save it again. Optimize. Let's run it. I got 128 tests. Shouldn't take too terribly long. We'll see. See how long this is going to be. Easier, obviously, to do it in one fell swoop if you can. If I have to break it up, I will, but hopefully not. So with this one, this is one test. If I want to test these, I'll test them separately. It's may not have anything different as far as those numbers go, but you can see I recorded the initial numbers. And then we'll go back and see what we come up with here.
Hey, Jim,
Yep.
while this is running, what are your thoughts on, in the process of optimizing from start to finish, at some point along the process, you start adjusting the trade times, but not in the beginning, right? You wait
Right.
until you've gotten to a certain point. You just talk about your philosophy about at what point you start narrowing the trade times in the
Yeah.
process.
Absolutely. So the first thing that I'm gonna do, because everything that you optimize impacts everything else, right? So like if once it's optimized for that 10 to 11:30, we saw that if we tried to open it up, it didn't do us any good. So we kind of have the two paths that we go down. The one is, like we talked about, if we start on this path and we want to change something drastic like the trade times, that's going to send us down a different path. So the 10 to 11:30 is kind of the sweet spot for that market. And I want to base everything on that. So that's how I'm going to start my optimizations. And once I know that that time is good, then I'll look to the left and look to the right to see if we can expand to add more time to that. The odds are that if I start with an 8 a.m. to, let's say, a 2:30, this is going to send me down a totally different path. And the result may not be as good as the result had I optimized based on that time. So this is what's going to give me more consistency. This could be a fluke, could just be that when we optimized it, we optimized for these times, but we know that 8 o'clock is nothing like 10 o'clock. And so you may end up with this kind of thing throughout the trading day whereas this is going to be more consistent and yield better long-term results. So, so that's kind of how I look at it. Once I have it optimized, then I'll expand it out. And you can do that each time, each week, and see if there's more advantages to trading more time. But I like using the sweet spot for each market. The equities 10 to 11:30, crude oil, really 9 to noon, that kind of thing.
Okay, so you pretty much come into it with a preconceived time window that since you're familiar with the markets, that's how you approach it.
Yeah.
What about someone that doesn't have that preconceived feel for it
Mhm.
and is just really trying to just optimize for the best numbers? I
Yeah.
mean, do you ever go the other way where you just start with a really wide time window and then you just narrow it as you during the process? Or is that just
Could,
not something you do?
yeah. Let's say you're looking at like a market like DAX, and we don't know, is it going to be better in the European session or the US session? Maybe put in some kind of hypothesis numbers on the different, different things that you kind of want it to do based on that. And, always start by looking at the chart. And then from there, optimize the time first, see what works the best based on those parameters, then go into that time frame, the most profitable segment, and really optimize for that. And then if you get an opportunity to be able to do more with it, then So
So my
that's
take on what you just said then, if you want to boil it down to something simple,
Mhm.
is try to find a sweet spot in the market as early as possible in the process, because
Mhm.
that'll give you more consistent and focused results.
Yes,
But if you need to start wide, but I mean, in other words, you're trying to do it as soon as you can in the process, not waiting till the very end or anything.
correct.
Okay,
Exactly.
thanks.
Yep, absolutely. No worries. This one reversal was the best. So now I'm going to turn these off and just go with what the algo told me was working best for that time. And let's go reversals. Okay. Now we're going to go back to stop and target just to see if we get anything better. Maybe the market is not as, it's not moving as much as it was when we tested. Maybe it's moving more. So we'll put these numbers in. We're going to go 18 to 24 by twos. And then our profit target, we'll stick with 1 to 3 because it's not taking too unbearably long to do this. Go 0.1. And let's see what we come back with. We got 84, shouldn't take too terribly long. And we'll see what we get on this one. Yeah, the sweet spot for the equities is going to be 10 to 11:30. That's going to be the most fluid. When I look at time frames, I'm trying to eliminate the anomalies, the one-offs, and that's why we put in the date blockers, because you want to go in and block the holidays, and you want to block the CPIs and the FOMCs, any major news release. You want to block those out when you're optimizing, because those are the anomalies. That's not normal market patterns and behavior. So you always want to base it on normal market patterns and behaviors. And if they happen to perform well on the anomaly days too, great. But you're not using that. It's garbage in, garbage out. Whatever you put into the test, if that's not your normal circumstance on how you're trading, then you're going to get a Frankenstein. You're going to get something that doesn't look like what you want it to do. So always start with something that is going to be inside of the normal range of behavior of what you're trying to trade, and then expand out from there. So the other thing that we can do on this one, I know it's a little bit more complex, but we could run this optimization on 2 different chart times. I have it on a 482. Maybe it's better on a 5-10-3. I don't know. I'm just running it because that's what I saw on the chart that looked good. And the point with this process is expect it to take time. It just takes time. I don't know about you guys. I'm pretty, I don't like to be stuck doing a tedious task for a very long period of time. That's not in my nature. It's not in my personality. I really don't like it. So it's hard for me. So I'm kind of saying that because of my own personality struggles with it. I'm not one to sit there and just dive into data and all that. It's not really my thing, to be honest. But expect it to take time because it just does. Ooh, I see the Megabar stuff that you guys are posting. That's pretty cool. Megabar.
So far, it's looking pretty good.
Yeah.
It's
No,
gonna
it
be a
looks
good
like a
one.
cool system. I'm excited to mess with it. There we go. That's better. So we came back at 24 on the stop, which was some of the top numbers that we were getting initially were in the 24 range. So that's great. So we'll take that. Still getting the higher R multiples on these trades actually that are coming in as the best. We got 1.8, we got 1.6. So really, we're not getting anything in that 1 to 1.5 range. Uh, Depending on how the next couple tests go, we might even be able to just narrow that down even more. So this is our first test, and this is why we do this. You can kind of see how it all comes together. 1.9 was the best here, so we'll just go ahead and lock that in. 1.9. Try that again. I got these tiny buttons on my keyboard. All right, let's save it as 628, I think it was. Save. Okay. Now, I'm going to put these numbers in here. So I'm going to go 15, 840. Another thing that I like to do, I don't know how to get this to be, oh yeah, I did save it this time. Sweet. I've got this formatted. So if you look right here at the bottom of the spreadsheet to where I can just go right down the list, 52.17, 1.92, 2.09, 2640, and 46 trades. Okay, cool deal. Now we're going to run it forward. What did it do the week of July 5th? Actually, hold on. I need to go to back tests first. Both reversal. Let me just make sure that's the same. Yes. Okay. So let's record these details actually. So this one is off. Both. And then reversal. 24, 1.9. Cool. Now let's run it forward. How does it do? Beautiful. Anybody got anything against these numbers? Pretty good. 1760. We got 44.44. Let me do this so I can see. 1.92, 1.53, solid numbers. Happy with that. 1375. Cool. So, it's about 44%, efficient, I guess is the best way to say it. So great. So that's good. So we'll go ahead and optimize again now. So now I'm going to go to load. I'm going to go back to, I'm actually going to start with 628 just to make my life easier. And we're on optimization already. Let me see if I can save it as a back test. Yes. Yeah. Okay, cool. Let me save it as a back test and not an optimizer. All right, back to optimization, back to the drawing board. So now all these numbers I'm going to leave the same. First thing I'm going to do is change the date because I tend to forget these type of things. And so I'm going to bump it 1 week on either side. And then I'm going to go back up to the top and we're going to do it all over again. And this is literally the process that at least I took on all of these that I tested. Cool. Those are locked in, so that's fine. Let's run it. All right, so while that's running, just as a reminder, here is where you can find all of your goodies are down here at the download spot. We've got day 1 replay. Day 2 is coming soon. Obviously, once we're done, we'll get that to you. As a super special deal, giving you access to 19 algos for the price of 1. So you go there. I've already got it in the cart. So once you add it to the cart, you're going to need a coupon code. And here is the coupon code. Cool. So you just enter that code here, fly, and voila, you get 19 algos for $19.95. As a hint, I would expect that the new algo is going to be $9.95, about half of that. Usually the sale price is anywhere from $9.95 to $14.95, depending on the algo. Launch pricing is always the best. So launches always come in at that level. So yeah, so good stuff. So great deal. If you haven't taken advantage of it, there it is. If you are like, yeah, I just want to maybe buy 1 or 2 algos or something like that, let's go in here and see what the pricing is like on those. Do we have any sales? Yeah, so about $9.95, $12.95 on sale there. If you are here in this event, you're like, oh, I just could use a little extra coupon or something on one of these other algos, reach out to me. I'll be happy to get you set up with a coupon. Okay. I can't do it on the launch, so don't ask. Not going to happen. And then anything that's priced at $9.95, no can do. But if there's any of these other ones that you're wanting to grab, let me know. Okay. Happy to give you a little special price on those. My email is just jim@neurostreet.com. If you need support, definitely reach out to support@neurostreet.com. They'll be your best bet. If you need a coupon or something, reach out to me directly. On that one, Michael, send a message to support. Yeah, send a message to support on that. See what they can do for you there. Yeah. Actually, send me an email on that, Michael. Send it directly to me. Won't let you enable it. Are you connected to data? Wow, wow, wow. And it's all good. That's usually where I start. Oh, wait, am I connected? Oh, that's why. I was gonna say beyond that, I have no idea. That's all I got. It's the only thing I have in my bag of tricks. All right, so where did we come back? We have false at level 1 for sure. And then we have both off reversal. This one is both off, both reversal. Let's look at the drawdowns. Really, this one is clearly the best. There's less trades, but more money on the table, less drawdown, better win rates. I don't see any reason why not using that, right? So let's go ahead and lock these in. And before I do anything, I'm just going to go ahead and take notes on what came back. So we'll go here, scroll back up. This actually should be 628. Set 5. Oops. That's fine. All right, so level 1 is off. Next we have both, and then off, and then reversal. Cool. Now I'm going to lock those in. Let's go just both. One thing, if you haven't noticed already with NinjaTrader, you kind of have to click it and then kind of stay there. I don't know why. This didn't test for trend, so I'm going to go ahead and test this for trend as well, just for fun. And then this will be reversal. Okay. All right, let's test stops and targets. 18 to 24. Let's go 1 to 3 again, but I think we'll probably be able to narrow this down after this test and see what we get. I do have more tests coming in because I kept this one set to 2 different tests. So it's doubling the number of tests it's running right now, which is fine. It hopefully shouldn't take too long. Send me an email, Jose. Yeah, send me an email. Have all accepting golfing and autofib. Well, send me an email, Heron. Yeah, absolutely. I get you covered. If you've already bought most of them and you just need a couple more and you want a deal, for sure. Got you covered. Guess this one is going to take us a little bit of time here. All right. How do we kill 12 minutes? Anybody have any questions? Anything I can answer while we're at it? Yeah, great question. So Frank's asking if there's market news, when do you decide to start trading again? Or do you just watch to see what the market's doing after the effect of it? You know, definitely I would stop trading maybe 5 to 10 minutes before the news, depending on what the news release is. If it's crude oil inventory, it's going to be at least 10 minutes before because it starts getting a little chaotic. The thing of it is you just don't want to be in a trade when those are coming through, you know. So if you get a trade that comes in at like, 10:19, you may still be stuck in that trade come 10:25 and you might be getting kind of tossed around. So, you have to factor that into it as well. And then, as far as the aftermath of it, again, depending on the release, if it's a major release like CPI, FOMC, minimum half an hour to an hour, minimum. If it's crude oil inventory, probably gauge it, but 15 to 30 minutes probably after is probably good. Because what you'll see is the market will flush. And by flush, well, this one's not going to be a good example. Let's go back to TradingView for a second. You see this on crude, how it took out these highs and then took out the lows. That's a flush. That's like the market is just eating up orders in here. And you don't know which way the market's going until one of those is broken. At that point, once that's broken, then okay, longs are in favor. And that's kind of where I'm going to focus my attention in that process. And you can, if we had anchored VWAP here, and you can look at that and okay, the market's crossing over, and clearly the momentum is to the upside. You're favoring the longs. But this is, again, we had crude oil inventory came in at 1030. So what did they do off the inventory? Well, they were already bearish, swept the highs. Then they went and swept the lows. So in anywhere in this market condition, you really don't want to trade because you don't know what the direction is going to be. And when I say you don't know, because this was a sweep, it's a liquidity sweep. They swept out the highs. They went on to break structure, but all of the liquidity that was here is now gone because they already swept that out. So you're relying on this level, which was already swept out here. There's nothing to give you resistance at that level. So if you're trying to look at going short, you're kind of screwed. You're not going to get anywhere. So with a news release like this, you really don't have anything to trade until that. Once you get this close, to me, that's when I would start trading again. So how long did that take? I mean, that was like, you didn't even get anything until like 11:45. It's like an hour and 15 minutes later. So just gauge it. What you're looking for, look for the sweeps of the highs and lows. Look for that, because anytime you see that, don't trade. You're gonna get crushed. I've seen it too many times. And you'll see in the trade rooms, like I'll just be sitting there waiting. People are like, what's the trade? There isn't any. You want to trade, knock yourself out. I won't touch it. So that's kind of what you're looking at. Yeah, for sure. I bet if we dive into, this level, there's going to be some support down here, and, probably had some nice trades coming in off of VWAP right here, right? Like that's our normal VWAP trade right there. This is actually one of our setups right here, and entry would be right there. Came up, took on a little heat, and then blasted to target. So what time was that trade? Yeah, almost noon. Wasn't even watching for it. So yeah, great question. All right, where are we at on our test? We done yet? Are we there yet? That's how you know you can annoy the algos. Are we there yet? Yeah, always keep the most recent one. The reason that you're going back in time is so that you can get the ranges of what is relevant and what isn't. The whole process of doing this is to set you up for future quicker optimizations and more consistent optimizations. That's the whole purpose of going back in time. And you could do it forward. Obviously you can, but it's going to take you 4 weeks to do it. So how do you eliminate 4 weeks of time? You do 4 weeks going backwards. What's the difference? Save yourself some time. You don't have to wait 4 weeks for the answer. So, thank you very much. Yeah, for sure. Oh, awesome. I'm glad you got something out of it. That's great. Cool. So while we're at it too, while we're waiting, what do you guys think? What are your real thoughts? No fluff, What did you guys think of this event? Was it helpful? Did you get something out of it? Chime in the chat box. Let us know what you thought. I'm not going to go super official and do surveys and all that stuff, but good. What did you like the most? What was your favorite part? Is there something you think that we should add to something like this next time? If there's a next time, assuming there will be, chime in on that. Let us know where you're at. Always good to get some good feedback, good, bad, everything in between, and let us know, because obviously we can always make improvements, and it's good. Yeah, I was thinking that along those lines too, John. I was thinking like, how do I make this? Yeah, I get what you're saying. Yeah, for sure. Promo should be good. Actually, I don't know. I don't know if they put anything on there. Usually it's like 2 to 3 days. So I would say, today being Wednesday, I would say if you need till Monday or something, that's probably fine. Usually they'll expire on like Saturday or Sunday or something, but good stuff. Thanks, guys. Yeah, recordings are up. Yesterday's recording is available. If you go to the members link, is right there. Good, nice. Okay. Yeah, I could see that working really well in the NGC in the pre-market for sure. That's great. Today's will be posted, should be later this afternoon, this evening. They're usually pretty quick, much quicker than me. So they should have them ready for you right away. Click that link that I posted there, Brian. Yep, click the link. It's in the chat. I think there was some questions on the first week. Here's the numbers from that first week on, oh, there's not 39 trades, but how many trades were there? 9. Mm-hmm. Yep, good. That'd be awesome. That's the biggest challenge for me is time. Just having the time to do it. If you want to start kind of, putting down together like a foundation of it, that would be awesome. And then I can send you the slide deck too. That kind of give you some notes to go off of or whatever. But if you want to start building it, then we can kind of, workshop it back and forth. That'd be awesome. That'd be really great. Yeah. No, that'd be incredible. And we can give that out as a resource. That's great. So we're talking about like a step-by-step planning tool, so we kind of have all the steps laid out and how do you do all this, I kind of do it as I go, and just kind of take notes a little bit as I go, but it would be nice to have something that's, really formatted nicely. So yeah, that would be really cool. Wouldn't optimize daily. I would do weekly. Yeah, weekly's probably your go-to. There will be multiple weeks too where you don't change any of the settings, even after optimizing. That's a good sign. That just tells you that your settings are working. Almost there. Are we there yet? Yeah, for sure. Send me an email. Always happy to work with you. Minimum number of backward days. Depends on the number of trades. I really like the 4-week process. I think going beyond that sometimes is overkill, but doing less than that could sometimes be a challenge. Like we look at, yeah, that's the one. We look at like this week, chaos. Last week, the week before, the holiday, right? So you kind of look at that and you're like, those are the 4 weeks that you're testing. Do you really want to only do 3 weeks? Well, then you're looking at the 4th of July week plus, the week after, which was kind of playing catch up, and this week is kind of chaos. So yeah, it's really hard to kind of hang your hat on that type of stuff. So it's good to have more data in there and so on. All right, so we came back at 24, really solid numbers, looks great. This one, I want to first go up here. Yeah, so this came in as off. So we'll turn that off. And then let's go to 24 and stayed at 1.9. So those numbers are exactly the same. So that's great. So then we'll go ahead and save this as July 5th. Save. Go to backtest. And let's see, both off, reversal. Yeah, so those all carried over. So that's great. 24, 1.9. I usually like to run it again as a back test, just so that I know that I didn't screw something up, had the wrong settings, anything like that. But so false, both off, reversal. So those are the ones. And then we have the other thing I'm going to do here is I'm going to resize the position because the largest loser was 660. So what would that be? Be 33 bucks each. 30 bucks each, sorry. So 500 divided by 30 is going to put us more like 16. Let's resize that so we have apples to apples and run it again. And I think even the first one might have had more contracts. But yeah, we ran 22. Let's see what our max loser was. Largest losing trade. There we go. So on that one was where? Right here. Yeah. So that was 660 as well. So we could even resize that one, to be honest with you. Why is this not running? Yeah. Let's do this, huh? Should we? Can we, please? Oh, now you're going to work. Great. The other thing I can do for that first one is just do the math on it just as well. 660 was the same, so we would size it down to 16 divided by 22 is 0.72 times 15, 840 is 11,520. And then the drawdown, let's do this way. Yeah, that didn't work. 0.7272 is what it was. So we'll just do that times 2640. 1919. Okay. So this one, yeah, really good numbers, man. All right, let's save it again. July 5, Shazam. Let's put the numbers in. So 18,120, 65,85, 1.92, 3.7, 960, 41 trades. Really great. But that don't matter. The only thing that matters is, yeah, but did you make money? So let's go check. 712 and 78. There we go. Forward test. Man, we might be on to something here, guys. 13, 20, 50, 1.92. The OG, man, I've always liked this system. Always.
Winner,
Always
winner,
liked
chicken
it.
dinner.
Yeah, it's a good one. With optimizations, do we need at least 100 trades, or if we did less, what would be the minimum? 50 is kind of the minimum to me, like bare minimum. Anything less than that, and I really don't feel very confident in it. I like to start with 100. But 50, it depends on what you're doing too. Like if you're on a 5-minute chart, you may not have 50 trades unless you go back to like February, so you might have to just kind of go with that. So, but yeah, that's a good benchmark. So, so you get an idea of this process, right? And, I can, let me go ahead and I've got it saved. Yeah, It'll be in the deliverables. The Excel sheets should be in there. So you can just copy those pages over. And then if you want to take a screenshot of this, take a screenshot because this won't be in the one that you have. So just go ahead and screenshot that. And actually, let me go up a little bit. Sorry. Okay, there you go. Take a screenshot, guys. We can look at maybe posting the VWAPR stuff in Discord, maybe. I'll post the finished template for July 5th, and I'll just post that, and then you guys can run with it because you'll know what numbers to run moving forward. So yeah, we'll do that. That'll be the best way to go. Cool. Yeah, watch video first. Watch day one and start to make more sense. If you guys haven't seen the algo week that we did, there was like 5 days that we did back in June. You're going to want to watch that. This will all make more sense. This was kind of designed to be like, next level beyond that training that we did. So.
And for those that are maybe more at the beginning of the learning process, don't forget that there's some really good training videos on the website, where you download the software.
Yeah.
There's a link to algo video training, and there's all the different video courses there, especially the 3-hour brain training, which is a very thorough going through all of the different parts of the core engine. So don't forget that. This training and last month were more advanced compared to that.
Yeah.
But if you're kind of more towards the beginning, you definitely want to go to those training videos as a starting point and then move on to these.
Yeah, for sure. Yeah, exactly. There's tons of training out there. There's also AMAs for each algo. So now the really cool thing about this is we don't have any that we've optimized for MES. So this could be your MES market on VWAPR. Just call this VWAP on MES. Yeah, like I say, I've always liked VWAPR. I've always thought it was a great tool. It responds well. It's easy to optimize. Yeah, it's a good system. So run with it. It's oldie but a goodie. Good old VWAPR. Lots of pages on your website. Yeah, there is. Man, some of them have the AMAs. The AMAs are usually housed in the members area. If you're looking at a specific algo and you want to watch the AMA first, just email us and we'll send you the recording. It's fine. So good deal. So we went a little bit over today. We kind of finished up a little bit on the early side yesterday and went a little over today. So works out. But we covered a lot. I mean, we really went through a good deal of detail on how to do this stuff. So hopefully by now you've got a better grip on, how to move forward, how to put this all together. Again, detail everything, put together a process that works for you and run with it. I think there's a lot of opportunity with these algos. It's just figuring out how to learn what you don't already know and then putting it all together, and man, I just think there's so much opportunity though with bundling these algos together. So good stuff. Glad we were able to do this. I feel like this was really cool event. It was fun. So good stuff. Thanks for being here, guys. Thanks for participating. And as always, we appreciate your business and appreciate your, your purchase of this course, obviously, too, and ongoing algo business and all that. So if there's anything we can do for you, of course, reach out anytime. Support is always your best bet. If you need anything, as far as coupons or anything, like I say, email me directly on those. I can help you on that. But yeah, good stuff. I think we're good to go. I think we did it. So now I expect you all to report back next week with how much money you made. And yeah, let's go make some money. Let's go get it done. So cool. If I can help with anything, let me know. Reach out. So yeah, send me an email on that. Yeah. right, guys, have a good rest of the week. See most of you, a bunch of you back in the trade room tomorrow. We'll see if we can wrap up the week on a high note and see if I have to trade on Friday or not. Have a good one, guys. We'll catch you next time. Take care.